Hello dear traders, welcome to another trading video. Today we are going to be taking a look at the Bollinger Bands. I'm going to be showing you a very nice strategy, two of them actually, how to use this indicator for your trading. Very nice webinar coming your way very soon, so I hope you like this one with our video about Bollinger Bands. If you do find this useful, if you find anything in this useful for your trading, please consider liking and subscribing to our channel. Click the notification bell to be notified for future webinars, and you may even see a couple of live. We can give you a shout out on the comments. So without any further ado, let's jump straight into it and begin with our presentation of the Bollinger Bands and how to use them with our secret strategy. Let's move things along. First and foremost, let's introduce the creator of the Bollinger Bands, Mr. John Bollinger, CFA, CMT, and the creator of the Bollinger Bands. This is his creation. This is what he created with the Bollinger Bands. These three lines that form above, in the middle, and below the charts before on the moving prices, the price action. So first thing first, John created the Bollinger Bands in the early 1980s. So this is nothing new. That's been around for over 40 years. And they've been working wonders for us ever since. They were created from the need of adaptive moving trending bands. Very important. We're looking back in the 80s here when things were a lot more rough, a lot more unrefined than they are now. They were created, and he proved that the volatility is dynamic, not static. Prior to the Bollinger Bands, people believed that the volatility is not dynamic, which is like a static thing that doesn't change. They can be applied in all financial markets and all time frames. Very useful indicator. And price is high at the upper band and price is low at the lower band. That is our explanation of what the Bollinger Bands are, and now we're going to take a look at how we can use them. So for the strategy we're going to be looking at specifically how to use, what to use, we are going to be looking at the Bollinger Bands themselves. We're going to be adding support and resistance lines to find these opportunities even clearer, making it better for us. So the strategy setup, time frame for the candlesticks can be any. Binary expirations, 8 to 10 candles. Like always, if you are planning to do trades, then if you're doing a 2-minute trade on binary, then you should be looking at 15-second candles. If you're planning to do longer trades, like a 30-minute, a 4-minute trade, then you should be looking at 30-second candles. Anything larger than that, if you're doing long trades, 15-minute, 1-hour trades, or even longer than that, end of the day trades, you have to adjust accordingly to make sure that you, from the moment you click the button to place the trade until the trade expires, you should be looking at 8 to 10 candles in that time frame there. Very important to understand this part. Okay, so the first ingredient is the Bollinger Bands. We are going to make a small alteration. We're going to make it 20 and 2, the intervals itself. So that's the first thing. And the second thing we're going to put in is the support and resistance lines to show us even better, even clearer entries. Taking a little look at the Bollinger Bands, explaining a bit more what they are and what they do. The middle line is a moving average that we have set to 20 periods. Then on the other side, we have the upper and the lower band. These ones are a plus and minus 2 standard deviation from the moving average, the middle line, right? So 2 deviations, plus 2, minus 2. That's the Bollinger Band. Simple and easy to understand and follow. What we understand from it now, during a sideways market, the bands are becoming tighter. As we can see, the lines are squeezing into each other and going backwards instead of forwards. So lines are getting closer to each other, and this is a sign that volatility is slowing down. As we can see here, it gets very narrow, and the market is getting squeezed into this. Small candles, small movements, low volatility. Then moving along, during a trending market, the bands become wider. Trending market leaves the sideways moving, starts opening up, so you can see the two lines are moving away from each other. The bands become wider, more volatility, bigger candles are expected, more action is expected. Same happens a bit further down as well. They do tighten a little bit, and then they push away again. So this is a second wave of volatility. Very good information. Just from looking at this, seeing those two outer lines moving away from each other is a good sign that volatility is coming. Pay attention when you're trading. Look for moments like this when you are using the Bollinger Bands, because most action happens normally during the volatility. Markets do tend to be trending, non-trending. It doesn't stay forever though. Sooner or later, every market will go through both phases. Small moments of sideways movement, and then eventually there will be a breakout upwards or downwards. That's what we can be preparing ourselves for. When the price reaches the upper band during a sideways market, the price could be considered overbought and could reverse. As we can see here, the market touches the band, again there, and again here. So on all three of these occasions, you're just using the Bollinger Bands, you would be tempted and you could go for a reverse trade. So you're going for a sell trade in these three examples here. Once you see a touch on the Bollinger Band, expect the market to reverse and go closer towards the middle line. Same on the bottom side. When the price reaches the lower band during the sideways market, the price could be considered oversold and could reverse. Simple and easy. There's one touch there, another touch here, and a third touch there. 3 times the market touches the lower Bollinger Band. So on 3 occasions, you could go for a buy trade. And on all 3 of these examples, 8 and 10 candles, you can pause and count. You see that all 8 and 10 candles from the moment entered are successful. We want to make things a bit better though. We want to make things a bit more safer, a bit less aggressive, a bit more less trading, let's say, but more precise trading, because it won't always be this way. There might be moments where it does touch the line and it stays on the line. So by using this technique here with the lines, we implement the support and resistance lines to give us even more information. As we can see here, the market was coming down, it reached, touch this level. At this moment, we still didn't know that this was a support, but we can consider possible support because it does touch the line. We would not trade it yet. Market goes up, stays in the band, comes down, touches again. Once it touches here, I can draw the line in and I can take a trade because I know now that this is the support line that I have set from before. It has reached the low. Once it pumps up, at this point, I can place my trade in. Once it moves away from the line, I can trade it in. So let's take a look at the upper side first now. We have 2 moments. Before we took that one into consideration as well, but now we don't. Market was coming down, so it means that this line, if we extend it, there was a preset resistance line there. So we had that resistance from before. It was support, now it turned into the resistance. So once it came down, touched, we now at this moment found our support as well. It comes up, touches the line that was there from before, that we had from before, and we have our go signal. We place our trade in, and the trade would end somewhere in here. 8 to 10 candles is somewhere in there. Nice, lovely win. Comes up again, touches the line again. At this moment, we'd enter. First 2-3 candles are a bit worrying. There is a little bit of a time when the market does breach and stay above our line, but then after it does stabilize and go down. So where is it? We traded on this candle. So 1, 2, 3, 4, 5, 6, 7, 8. 8 candle is this one here, ends there, would be a win. 9, 10 ends here as well. 2 lovely winning trades on both this one and that one. Let's look further down now on the reversal side, on the other side, on the breaking on the bottom lines. So when the price touches the lower band and is under the support line, we can consider a reverse moment. First one, as we mentioned, we're not going to take it. We would take it before we didn't have the support line in, but now that we do have it, as I mentioned, we found our support here. This is the moment we found this as a support. We could have traded this. Market came up, stayed up, clearly a win. Same here. It touches the line, passes the Bollinger Band, touches the line, reverses. That's our entry. We enter here, and at no point the market came anywhere close to reversing down to it. So it would have been a lovely winning trade on this occasion as well. So in this small little moment here, if this is 15-second or 30-second candles, it's very fast. We had 4 signals in a short period of time during this sideways market with the touches. Just important, put the support, put the resistance in as well once you identify a sideways moving market, and you can expect hopefully to catch a couple of good moments in there. If you can nail 3 or 4 winning trades, you should be more towards your successful day. 8 of those, and that's it. You have reached your target, hopefully. Now the second way. The second way to use this approach is going to be just as nice. This one's going to be a breaking out moment. So we're going to trade the breakout from the low volatility sideways trending market. What we saw before, eventually it's going to break out, either upwards or downwards, and we're going to be ready for that. So we add our support resistance lines in. As we can see, market was climbing, it reaches up. This moment here before was our resistance. Since it broke it, it became our support. We had a touch and another touch. At this moment here, I can identify this more or less as a resistance. Once I had a touch there and a rebound touch there as well, I know that this is quite strong now. I've got 2 touches on it. So this one comes in. This one was in there from before, so that's it. I have my channel created. We wait now for the start. We can use it as we showed before on the first example, using for touches. There was a touch there and it comes up. We could have placed that one in. It came a little bit close there, but it did move away, so that would have been a winning trade if we placed it there. At the top side here, there wasn't a touch. It comes very close, but if you pay close attention, you see it doesn't touch the line, which is a good sign. You may have been tempted because it did touch the Bollinger Bands here, got touched, but it didn't touch our line, so you would not have traded it. If you did trade that and you went for a sell trade at this moment, as you can see, it does kind of stay underneath if you were right on that moment there above the line to trade, but it would be risky. Advice would be to wait for the line to get touched before you can trade that one in, like we did here. This moment here, we could have traded it. It did touch the line, then we could have placed our trade. It is above the Bollinger, and it would have been a lovely trade on that occasion. But sooner or later, it's going to break out. So what are we going to do? We're going to wait for the candle to break over or under and pass the support and resistance. Very important. Let's move things forward. It is the same moment of trading. We just moved things along now to the actual breakout itself. The bands are widening. Look at my little arrows here. You can see the lines are moving away from each other. So volatility is picking up. Very important for me to see that the bands are moving away from each other. Volatility rising is what I'm understanding from this. I have my lines in as we found them from before. They should be still in there. And now I'm waiting for a candle to break over that line. This is the one. The previous candle broke over the line. This one opens and closes above the line as well. So this shows me that my previous resistance has now been broken. This gives me a green light to go ahead and fire in a trade. A buy trade, of course, because it broke in the upward direction. It broke up of the Bollinger above the resistance. So I'm going for a buy trade. And as we can see, let me just take that little arrow away. 1 second. All right. So if we placed our trade there on this candle I opened, at no point ever, 8, 10, 20 candles later, nothing comes anywhere close to that. So it would have been a single, but a very nice winning trade. That will be our new resistance once it reached up here and it started fading down. But it would be a bit risky because it is not a sideways market now. It is a trending market. All possibilities, it could do a bit of a pullback and climb again. We had to wait again to see the next thing in the market. Possibly this moment here could have been going sideways. The bands started narrowing down. Market started moving sideways. So this same moment there, if I draw a line there, you can see this would have been a nice resistance. So that was my resistance from before. The support was this one initially. Once it climbed, came here. This moment here is a possible support. It gets more or less confirmed here, but not really. I would most likely wait further down for the support to form a bit in the corridor there. So the same thing just for the opposite. If the breakout happens on the bottom side, nothing changes. Same requirements for the sell trade. Lines are pulling away from each other. Market touches. If we were placing trades on the sideways market, we had a moment here. There was a touch on the support line under the Bollinger. So I would have went here for a buy trade. It does close somewhere up here. So that's a lovely winning trade. We have a touch on this moment. This one would have been a bit tight. There was a very big spiky candle here that was not so great. But if we did place that moment a trade up here, once the line got breached, if we placed it anywhere above, even better. But that would be a bit risky. Once it pulled back in, we could have traded it. But that's one candle, 2, 3, 4, 5, 6, 7, 8. 8 candle closes there. It would have been a winning trade, but it would have been a very close one. This one's a lot better. There is a touch, and it comes down straight away. Once we identify somewhere on the top of this candle, we placed it in again. Down here will be the expiration. Another touch here under the line. This one, not so clear. There's the first touch. This is the one we would have traded. So 1, 2, 3, 4, 5, 6, 7, 8. 8 candle finishes down here. This one wouldn't have been good, but it did give us the breakout. We did get the breakout moment here. Next candle opens under it, closes under it. So that will be the moment. Volatility is rising, as we mentioned. That candle breaks the support, meaning that the market now is in a trend. I knew already from before, seeing the lines move away from each other. This candle is where I'll be placing my trade. Even if you will caught the end of that candle, the bottom side of it, actually it does close up here. So this moment, if you traded the beginning of that candle or the end of this candle, no difference. We can see where the market ends. 8 candle, 10 candle is somewhere down here. Clear, very far away from our entry. Very, very nice trade. A singular trade, we would catch this moment there, would wait for the market to do the next move. If, as we can see here, this line starts to fade down, means it is narrowing, market is shrinking the volatility, reducing volatility, and if it would go into a sideways or a second blowout would happen again, we could trade that one too. Simple, easy, very effective. Try it out, guys. If this is new to you, if you haven't used this Bollinger before, I would suggest using it first on your practice account. Get familiar with it. If you missed something, you can re-watch this video a few times. You can join me on the live webinar, which we have very frequently. At least twice a month we have live webinars. So if you are new to our channel, please, like always, subscribe to our channel, click the notification bell to be notified for the videos, and join us on the next live webinar to have any questions you have answered, and be a part of our team on learning together. Hope you enjoyed it, guys. Wish you a very good time trading, and all the best for future trades as well. Take care. Bye-bye.